Good afternoon. This is Chris Brecher with the Simpler Stocks free video for February 12th, 2016. It's 4:23, about 23 minutes after the bell. Basically, you got today that the market's weakness in Asia, weakness in the European stocks is basically what you got in here was a follow through in our market. And now we have a sort of interesting situation in here. Number one, what are the markets keen off of the most in here? Economic and financial instability. And what do I mean by that? You've seen a rush to gold. Let me show you gold on here, which has had a just absolutely parabolic move in here. I mean, that's an understatement if you ever know it. You've had almost a parabolic move in our U.S. bonds. And then you had an almost parabolic move in the USD Japan, but obviously I show it this way where it like crashed in here just like I had shown about a week ago. Actually about a month ago, I said I was worried about this head and shoulders top. Look at this on a shorter term chart, and I had mentioned that if it broke here, it was going to go to 110. I guess maybe I should start trading futures, not call the simpler stocks, but basically I just show this in relation to what would be the domino effect and what traders are keen off of. One is they're keen off of this, they're keen off of the gold, they're keen off of bonds, they're keen off of bank stocks. So what's happening is there's a flight to quality, taking bonds up, taking the yen up as a flight to quality, and taking gold up, which obviously traders are spooked unless they see a reversal. So what happened intraday today? Look, and I'm going to take this off and unlink it so you could see it just on a daily chart, is look at the gold on the left and look at bonds on the right, and I'm going to put it on a daily. And notice the candles in here. This doesn't mean it's a top, but that little blip reversal here was enough to get our market to sort of turn around. Not great, but just have a nice bounce. So let me just show you. You're going to put gold on the left. I'm going to put it on a 15-minute chart. Now, we're going to put the ESs on the right. We're going to put this on a 15-minute chart. You can see that when you had the reversal right here in gold, that was the first pop in the market. And now the market went down to test the level again, but then started to rally. Now, I'm not saying a big rally because, as you see on here, the ESs were still down 21.50. But this is where the big meat of the day was. Check out the NASDAQ, which actually individual NASDAQ stocks had acted pretty well all day. I mean, relatively. You had Amazon, which opened the day down about 2, up, ended up 13. You had Google, which was down well over 10 points, up like 11 cents. You had Facebook that was getting pummeled for about $2, up 111. But the whole idea here, when you show the overall NASDAQ, it still hasn't fulfilled its weekly objectives on the downside. But I hope with everything I've taught, you can see this on a 15-minute, a mile away of the Stewie pattern. Check this out in here. I had been watching this all day. And the second it broke it at 39.34, and I'm telling you, I try to make this on simpler stocks where it's simple. And I've always said the simpler the pattern, the more traders that follow it, so the more likely it's going to work. Check out this pattern right here. 39.34, we'll take it right here and take 38.80, 50 points. Check out 39.34 plus 50 gets you to 39.84. Guess what almost the exact high was? 39.85. That's close enough for me. But the whole idea is when you're deciding on your game plan to trade, there should have been 2 things you saw today if you were a NASDAQ trader. Number 1, bear flag, short. Stewie pattern, buy. And simply like that, I know a lot of traders that come in and say, I can't figure out anything to do today, or they come out with some esoteric idea. My thing is intraday sometimes it just slaps you across the face like a wet noodle, and you just see these trades set up, and those can make your whole day. You don't have to be in for every little wiggle. You look, like I've said, chart patterns trump indicators. So anytime that you see finally multiple points of reference that can be drawn, that becomes a big deal. Just like right here, conversely, even though this is the middle of the night, if you were trading the middle of the night, that works. Now, the reason I'm showing you this, even though it's simpler stocks, is that when the whole market usually moves, that then 85 to 90% of the underlying stocks move the same way. So the whole idea is if you see the NASDAQ acting like this, and you're trying to develop feel, which I'm trying to teach, and I'll have a day trading class on it. When you see the NASDAQ like this on the left, and then you see stocks that were acting pretty darn good all day, and let me unlink it so you can see it. This is the ES or the NASDAQ. The whole key is when you see Disney here, and Disney refused to go down intraday, and you see this about to break, I'm going to be buying the stocks that already are refusing to go down. Now, what is the reason that Disney refused to go down? Earnings came out, buyback. 2 days after their earnings, they can start buying back their stock. And isn't it a coincidence that today, look at a daily chart. Look how bad this stock has looked ever since they couldn't buy back their stock. The rule is you can't buy back the stock 5 weeks before earnings or 2 days after. Go back 5 weeks, which is about in here, and notice that as it started plummeting, the company couldn't sit there and take a stand and save the stock. All of a sudden today they can. Don't you find it curious that the first big green candle that's actually engulfing in here is actually the day they could start buying back their stock? I find that fascinating. So the whole idea is when you're developing a game plan, the thing, and I'm going to teach this in the day trading class, number one, you have a theory. And I like to have 3 reasons, but one of them is Disney might buy back their stock, 2 days after earnings. 2 is no matter what the market threw at it today, Disney, after the opening, was holding up pretty darn good. So the whole idea is that's a good reason right there. It's holding up relative to the market. Then when the market started stabilizing, Disney took off. So took off all the way to 91. Unbelievable. So those are the type of things we talk about on the premium side. These are the type of charts that I post in the forum and in the chat before the opening. We discuss game plans. We discuss what stocks are we going to focus on, and a lot of times they work. So I hope that helps. Like we have a 7-day, 30-day trial, and I hope you can join us on the premium side. Thanks again.